Talita Guerrero here, owner of Reiki Mortgage and also an investor. And today we wanted to talk a little bit more about what's going on with the interest rate. Now, guys, for those of you who haven't subscribed to our channel, make sure you subscribe and like our channel. I'm here with Dave Luczkow. He is our go-to when it comes to these type of topics. And we wanted to talk a little bit more about what's going on with the interest rate.
Good God, sorry. It's been
Rough.
The fastest increase in interest rate in like 20 years. I mean, we've seen interest rates go up just in the last month or two by, well, let's put it this way. Maybe last summer, so mid 2021, we could do a conventional loan at maybe 2.875.
Yeah.
Today, the interest rate's close to 5%.
That's insane.
4.875. That's a massive increase in like 9 months.
Yeah.
Right. Almost unprecedented.
Yeah.
So, of course, that has people freaking out.
Exactly.
Right. And particularly first-time home buyers or anyone. But here's the thing is, I always try and give this advice to people when they're looking at, is this a good time to buy? And the answer is, well, you have to compare that to your other option, which is...
we've seen this rate many times before.
Well, that's true. Historically, it's not a high rate.
No,
5% is still a very good rate.
Right.
And I think rates were at 5% about 3 years ago.
Correct.
So they were this high not that long ago.
Right.
But the first thing in making a decision about buying a house is, what's your other option? It's renting. So you should really be looking at your monthly payment. Correct. And comparing that to your other option, which is to rent, and then make a decision about whether or not you think it's a good time to buy.
Yeah.
Right?
Now, a lot of people are like, do you think the rates are going to go up or down? What do you think?
Yeah, I think the toughest thing with interest rates, it is by far the hardest market to predict.
It is hard.
It's the largest market in the world. It's all based on U.S. government. Mm-hmm. So mortgages are priced off U.S. government treasuries, and the U.S. government's the biggest borrower in the world, even though we're the richest country in the world. Figure that out.
Yeah.
But so it's just so hard to predict because it's massive and there's so many participants in it. But it seems like we're going to be definitely in higher interest rates for a period of time because the economy is so overheated because of all the money the government gave away for COVID, that it's kind of crazy. But they gave money away with this hand, and now, which got the economy going. So now they're trying to slow it down with the other hand by raising interest rates. Unfortunately, that's hurting the people that they probably would rather help. But
I love the option now that people can lock and shop. So
well, we have that, right?
Yeah, because we can't predict where the rates go. And however, it's pretty high right now. And we think, in my opinion, it's still going to go higher by the end of the year. That's my opinion.
Yep.
And again, who knows, right, with the market. But you can't lock your rate right now and shop for 90 days usually, right?
Yep.
So that's an option. And obviously, if rates do go down, you can still score a lower interest rate. But I will lock and then shop right now.
Right.
Because, we really don't know what's going to happen in the next couple of months.
That's a great point. So we've got a couple lenders who will let you lock your interest rate today, and you can go find a house, and I think you can do it for 90 days.
Yeah.
So if rates keep going up, you'll get the lower rate. And if rates go down, you can still get the lower rate.
Yeah.
Right.
And then another option is ARMs, which a lot of people are so terrified of.
Yeah, that's the ARMs. I love ARMs as a product, but you have to understand what they are. Basically, a typical ARM would be the interest rate would be fixed for 3, 5, 7, or even 10 years. Yeah. So a lot of times when people get a 30-year mortgage, it's like, you're probably not going to live in the house for 30 years.
Correct.
Do you really need your interest rate fixed for 30 years? It's like 30-year insurance, but you might only live there for 5 years. So that's why the ARMs can make sense for somebody. But I actually looked at one today, and the interest rate on a conventional loan in this case was like 4.875 roughly somewhere. And the ARM, it was a 5-year ARM. So the interest rate would be fixed for 5 years. It was 3.875.
Wow, huge.
It's a pretty significant savings.
Yeah. So if you are not going to stay in the property long term, or again, if the market drops, you can always refinance. Or worst case scenario, you can refinance.
Well, that's a great point. Like, I think people miss the point you just made, which is
you can refinance anytime.
Yeah, you can refinance a residential mortgage anytime. So you locked into today's rate, which seem high, but once you're locked in, it can't go any higher.
Yeah, and there's no.
And if rates ever go lower,
right,
you can refinance and take advantage of it. So,
but I think people have this notion on the last crisis that we had that everyone had an armory, and that's why it happened. And it wasn't regulated the way it is now. That's number one.
And they were teaser rates. They weren't true ARMs. I think they got people in at really low rates that went up in like 6 months.
Right.
So today's ARMs, it'll be fixed for 5 years.
Or 3.
Or 3
or
or whatever.
Or
but
10 or whatever. Yeah.
So much safer.
And then after that, guys, there's a cap. So it's not going to go from 3 to 15. You know what I mean? Or 3.8.
Right, exactly.
Like there is a cap every year. So they pretty much regulated the market to make sure that it's a safe product for you guys to be in.
Yep.
And again, most of our clients, they come back within 2 to 3 years, and they usually do something with that loan.
Yeah.
So at any point, as long as you keep your credit right, your income right, and obviously we can have that type of conversation with our clients,
Yep.
or you can find more information on our YouTube channel too. You should be able to refinance at any time. And no prepaid penalties. That was another thing that used to happen back in the days.
Right. There were prepayment penalties on the loans that got rid
residential,
of. Right?
yeah. So, and there's no prepaid penalties right now with pretty much all of our regular FHA conventional products. So there's really, the only thing you would be paying when you refinance is obviously your closing costs, which is a little bit cheaper than a purchase, but you still got to pay for closing costs.
Right. Exactly. But it still comes back to what we're saying is, interest rates are higher. So that does affect affordability.
It does. But keep in mind, that's also a tax write-off.
Oh, and the other thing I always like to say is once you've locked in your interest rate, your mortgage is not going to go up. Your real estate taxes and insurance could go up, but your mortgage payment's not going up. Well, are rents going up?
Yes.
In 5 years, is your rent going to be higher than it is today? Probably. Whereas your mortgage payment...
Inflation is unbelievable.
Right. So that's the other huge benefit of getting a fixed rate mortgage or a long-term adjustable. So.
And what I love about mortgages versus renting is you either paying down your principal,
right,
which is essentially
it's a forced savings
account,
savings plan.
Yeah.
Yep.
Or you're paying interest, which is a tax write-off.
That's the other, right.
So
it's tax deductible. So
that's right.
Yeah.
So I love that. For any more tips, go subscribe and like our channel. We're here to help. Thanks, Dave.
Thank you.